Bring in Brian Vaccaro, who covers restaurants for Raymond James. Brian, welcome. I mean, First Watch,
Hi, Kelly. Nice to see you.
It's nice to see you, too. Is there a brand name for First Watch that I would be more familiar with?
So First Watch is actually a little under the radar, but it's the scaled leader in a category that's seen tremendous growth really over the last decade, this brunch daytime cafe category. And they've been gaining a lot of share, we think, within breakfast. And some of that share gain has actually come from other sectors, other day parts, like dinner on the weekend. If you go out and have a nice meal and spend $60, $70, I do think that is stealing some share. I've done that myself every now and then. So First Watch is an interesting growth story, 10% plus unit growth, 19 to 20% store level EBITDA margins. And it's one for growth investors to definitely have on their radar.
That's fascinating. Apparently there's one not too far away from here in New Jersey. I might have to check it out. First Watch. All right, let's go back to some of the brands much more familiar to people, Shake Shack and Chipotle. Why do you think those stocks have struggled lately? Is it gasoline, student loans, all the things that, we've been literally just talking about?
Yeah, there's always a wall of worry these days to think about. And sentiment towards the group, towards restaurants more broadly, has really deteriorated and softened up as certain sectors, not all, but certain sectors have slowed over the last few weeks and into the early part of September. We are seeing some pockets of softness in the casual dining sector, where comps year on year are flatlining, if not turning slightly negative, though the limited service sector is holding up, still in that positive mid-single digit plus range. And just as your two guests, I think, were discussing earlier a few moments ago, there are pockets of strength and pockets of weakness, and it is difficult to get a read on the underlying health of the consumer. You mentioned Chipotle. Chipotle is one we've liked for a long time, tremendous long-term growth history to it. But Chipotle today, we believe, is still generating solidly positive traffic growth, which is rare these days within the restaurant sector, and has obviously an unmatched long-term track record as it relates to new unit economics, and is still, believe it or not, only about halfway through its North America growth curve. All
right, so you're saying don't bail on these ones just yet. Again, they're still doing nicely year to date. You also like Brinker, and you also like Bloomin'. It has an activist in there. Now, are those the only names in the more casual space you'd really want to be looking?
As the macro is a bit murkier and we're seeing slowing comps on a year-over-year basis, I do want to make it clear that I think things are still relatively stable through the lens of multi-year same-store sales if you were to look back to 2019. So there's some variability there just on year-ago comparisons. But one point I do want to make is that there's value ideas that are interesting and also some growth ideas. And we're really gravitating towards names with company-specific drivers that can cut through the macro, in our view. The two names you mentioned on the value side are Bloomin' Brands and Brinker. Bloomin' Brands has an activist. It's also a very cheap stock at about 9 times earnings. But there's not only opportunities to unlock shareholder value through its Brazil business or some of its ancillary brands, but you also have potential improvements on the ops and menu front as well there. On Brinker, they have a new CEO who's been there for about a year, and they are pulling some meaningful leverage right now that we think will be able to drive outperformance at the Chili's brand over the next next 12 months or so. That includes a return to more normal advertising spend levels, which we've seen in recent quarters.
Baby back ribs. You make a great point about cutting through the macro with some of these plays, as people are concerned or whatever they want to say about that environment. Thank you so much. We really appreciate you joining us today.